But the natural state of the free market is deflation. We only use things that give us more value. And all things that we use compete with what was there before to give us more value. And if an entrepreneur doesn't create more value for you, they go broke. You had a system that was outside of that system. You had a system that was open, decentralized, secure, protocol bounded by energy. And that protocol bounded by energy, as long as it stayed decentralized and secure, it didn't care about the actions inside the system. It didn't care if Trump wanted tariffs. It didn't care if you printed $10 trillion or $100 trillion. That energy-backed system, because it was outside of the other system, would perfectly price what I just described, all prices falling forever against it.
Hello and welcome to the Achieving Alpha podcast. My name is Stephen and I'm the host of the show. Today, I'm really happy to invite Jeff Booth to the Achieving Alpha podcast. It's really great to speak with him. He is the author of The Price of Tomorrow, and he is also a general partner at Ego Death Capital. Welcome to the podcast, Jeff. How are you?
Thanks, Stephen. Great to see you.
Yeah. How's everything going with you? You good?
Fantastic. Thanks. Yeah, really good.
All right. Well, I'm really looking forward to our discussion today. We can talk all things Bitcoin, and we can also talk about a little bit more about your book and some of the key concepts in that. So, big fan of your book. So, congratulations on the success of your book over the years. It's a really good read.
Thank you. Thanks. A lot of it's playing out today, isn't it?
Yeah, it is. It's playing out more and more as time goes by. It's amazing how it can go slowly, and then start to accelerate quite suddenly.
Yeah.
All right. As it's your first time on the podcast, I just wanted to ask you to explain a little bit more about your background, and then also maybe talk about your journey into Bitcoin, how you got into Bitcoin and how you went down the rabbit hole.
Sure. Background has really always been as an entrepreneur. And then early in the dawn of the internet, I saw a way to use the internet to try to fix an industry, to essentially drive the efficiency from the internet, what was being created there, to be able to fix the building industry. So I created a company there that at one time was worth about $500 million. Now I round trip that company back to zero. So they had lots of learnings in that too. But I also helped a bunch of different entrepreneurs and friends build lots of wealth inside that internet. Not that change from one system to another. When I say that, is that change from one system to another also had a lot of different bubbles, right? So when you remember early on in the 99, the internet, although the foundation was really important, it also had some hype and some things that went wrong. And trying to build a business in that is difficult, and a lot of things go broke on the way through. So, but lots of success in that, lots of broad success in that, lots of learning in that. And then from that, couldn't understand why prices weren't falling, because the internet was giving, the promise of the internet was everybody has a voice and everybody can contribute to the global economy. And for a while, it seemed like that was going to be the case. And then, but over time, essentially, you just created bigger monopolies faster. And that was because of broken money. So I couldn't understand why prices weren't falling faster and faster if we were becoming more higher productivity, and that was a global phenomenon. Why wouldn't? And that wasn't just in the things that were built on the internet, on top of the internet. That technology boom was everywhere. It was a first layer of society. And so that's what encouraged me to write my book and describe what was happening to the world and how most people were mismeasuring what was happening to the world.
Yeah. And as you look at it, in terms of your book, it obviously wrestles with technology, which you say is inherently deflationary. but we live in a environment and with governments that have financial systems which look for inflation. Can you just explain a little bit about the differences and the correlations between those two key concepts?
Yeah, and if this is the first time people have heard this, it's like almost like a record skip across your brain. It's hard to comprehend what I'm saying the first time because you've never measured what I'm saying. You've never lived in a society. There's no history book. There's never anything that's described what I'm about to say. But the natural state of the free market is deflation. We only use things that give us more value, and all things that we use compete with what was there before to give us more value. And if an entrepreneur doesn't create more value for you, they go broke. It's a global phenomenon. So now if you had that, because you're a part of that, so you choosing things that give you more value is a part of the economy. And entrepreneurs are by solving your needs and wants better than somebody else, they're a part of that economy. So now, once you automate that, and once you create a technology that is moving faster and faster, those things should mean you prices fall faster and faster and faster. But a debt-based economy, one that essentially loans money into existence, cannot allow deflation because the entire debt, which is the building block of what the entire economy is built on, would collapse and go to zero, and every bank would fail, everything would fail. So we live in this almost hypocritical place where we expect our houses to go up, and we choose more value in our lives. We try to get, and so it's not the governments, it's not anyone else, it's us not giving that more power. All of our actions through a system, if we're inside that system trying to gain more money, and that more money that we're trying to gain is being debased, just printed more and more money, then all of our actions inside that system are centralizing. And then we turn to somebody else and we say, how dare they do this to us? So, but that's what I just described. If it's the first time somebody's heard this, this is a big thing to overcome, because it's a cognitive dissonance of two different systems. And then what ends up happening is, and this why I found Bitcoin too, and why I went really deep on Bitcoin, is because you had a system that was outside of that system. You had a system that was open, decentralized, secure protocol bounded by energy. And that protocol bounded by energy, as long as it stayed decentralized and secure, it didn't care about the actions inside the system. It didn't care if Trump wanted tariffs. It didn't care if you printed $10 trillion or $100 trillion. That energy-backed system, because it was outside of the other system, would perfectly price what I just described before. All prices falling forever against it, as long as it stayed decentralized and secure. So what you have is today, very few people realize what the Bitcoin is repricing the world. They're measuring Bitcoin from a piece of paper, and they think Bitcoin's going up because they're converting Bitcoin to the piece of paper to then measure prices. But if you just measure prices in Bitcoin over any longer period of time, you'll see what all prices, house prices, energy prices, all prices, you'll see it's a perfect expression of the global free market. It's just early on a global free market. And as if it stays decentralized and secure, it will reprice everything over time.
Yeah. Do you see any mismatch with what's happening in terms of AI, for example? It's driven through and it's making lots of productivity enhancements, and this might lead to some deflation. Can you see any, like in the short term, any mismatch between the government's need to inflate the money supply and deflation in terms of technological advancement?
So when, and again, I just said that in a different way, but it shows how hard it is to grasp. Even the question shows how hard it is to grasp. Of course, there's a mismatch, not just mismatch. Think about two systems. Think about if you lived in a free market. Let's back up. why do you believe inflation is necessary? And I'm not saying you, because you might not anymore, but why do you believe inflation is necessary for productive economy? Why would somebody believe that?
Why would someone believe that inflation was necessary in order to make sure that the assets that they own are worth more money in the future and they have more of a nest egg when they're older?
Yeah, but then when they sell when they sell those assets, all of the prices are they pay for are higher, right? And they have to, and those assets are then taxed back by the state. So so specifically so I've heard all sorts of different things on that question. So why would you because you don't have a vote on the inflation rate. There is no person on the planet that has a vote for the inflation rate. So so you have a vote for the government, but you don't have a vote for the inflation rate. Meaning, if the inflation rate is a high inflation rate, you don't have a vote at all. Your vote doesn't count because that's just theft from somebody to somebody else. And so what you'd have to ask is, why do you believe theft is required for humans to trade? Which would be and as people go deeper and deeper, and then they might say something like this: if if people if there's no inflation, people won't spend. Okay, well, let's take that serious thought and apply some thinking to that thought and say, do you spend when you get more value, right? And yes, you do. You buy a computer, you buy TVs, you buy a whole bunch of things that price that you get more and more value. And if you waited, they'd be cheaper next year and more powerful, but you buy them anyway. So you buy food, you buy a whole bunch of things. So, but worse than that, if you just go into the point of the why you would do that, is essentially you're saying through that statement why you need inflation. People will only buy if we steal their money faster. That would seem like a ludicrous way to build an economy, but it is a centralizing way. So you end up centralizing. So one system centralizes more and more. Big tech gets stronger, government gets bigger. These collude against you as they centralize more and more, and they rip out the free market because it has to. Because that theft is stealing from people lower down. If you have less assets, if you're just in cash, or if you're in wages, you get stolen from at a faster and faster rate. The houses and different assets protect you somewhat, don't completely protect you, but as it gets centralized, and most people don't see it. And so what all the people at the bottom do is they vote for more socialism to be able to consolidate it in somebody else's hands. And then you centralize that way, and then you rip out the socialism and you turn to fascism as you consolidate it into either technocrats or dictators' hands. And most times through society, all of the population goes along with that from a simple thing is they want more money, and that money is based on theft, and they keep doing that and make it stronger and stronger through their actions. Where the opposite system, if you said, why do you need theft and money, why wouldn't you choose something that's better for you and your money's worth more? You would choose that. Well, that's what Bitcoin is describing. That's and a lot of people through this challenge, because it's such a challenging topic, will sell their Bitcoin for pieces of paper, and Bitcoin will continue to do this forever. And they'll consolidate into an ETF and sell their Bitcoin to somebody else who's taking more of their Bitcoin. But this is a state change from a society we've never lived in, one that was always based on a control system, to one that isn't based on a control system. That one that's a pure expression of the free market, and prices against that work perfectly, because the free market is the only thing we've ever found where we would trade with somebody we don't like, because they gain value and we gain value.
Yeah, that makes a lot of sense. And what about the future of jobs as well? As there's more and more technological advancements, more jobs go to AI and other cutting edge industries. How do you see the future of the job market? Do you think that this deflation will increase the number of jobs, as in provide new jobs, or do you think it will cut away a lot of the jobs that are currently in existence?
Yeah, so the jobs are going to be gone anyways, or most of the jobs are going to be gone anyways. The question is, so what is the AI doing, right? And think about this from you yourself building a business, or let's use your business first, and then we'll go into AI. You can now touch millions of people through a podcast that you don't have to fly somewhere. You can run it on your own without any staff, and you can touch millions of people. 20 years ago, that was impossible, right? You had to be somewhere else. So what did the technology give you? It gave you a way to increase productivity massively and touch other people through your work that then helped them. So you're providing a service to people. If your service is good, it will create value because you created value for other people. Free market expression. And that costs you almost nothing today. Whereas before it would have cost you a whole bunch of money to do that. What is that? It's productivity. Productivity gains, and people should say this over and over and over again because people conflate this. Productivity gains are deflationary. Productivity growth is deflationary. It's faster deflation. And so when people think, how are we going to grow out of it? With faster productivity means faster deflation. It means the rate of inflation shouldn't be measured from zero. It should be measured from the rate of the productivity gains that should flow to you today in society, which might be minus 5%. You're getting richer by 5% a year. Then the next year it'd be 10%. Next year it'd be faster, even if you didn't work, because everybody working would provide value to you, and through their work, through their trade. You live in the opposite system, which is very hard to measure what I've just described. So people are so scared of their job, they don't recognize the government is getting bigger and bigger to provide systems that are extracting that free market and extracting that productivity that should flow to you naturally and making prices higher and higher and higher. And they're living inside that system, scared to death about what happens when my job's gone. Because I can't live in that system because prices have gone so high. So, and they're making that stronger. They're giving government more control through their actions in that system. Whereas the system that Bitcoin is measuring is all prices falling forever. And so that productivity gains, or those productivity gains that we were just talked about, Stephen, what does that mean with AI? If we take now your podcast to AI, prices fall to the marginal cost of production in a free market. Marginal cost of production of a line of code is zero. So marginal cost of production of lines of code created by other lines of code, AI, is zero. So AI will be free, and it'll get better. And if you don't use AI in your business and it's a super productivity tool, then somebody else will. And your business won't be there anymore because their business is going to provide more value to their customers. So what would that mean for jobs? If there were a whole bunch of people that were required for this and people had to use more and more AI to make their business, and they're not doing it to remove the jobs, they're doing it to compete, to provide more value to their users. So of course, as more do that, and we are the other side of the users, we're choosing more value, of course that's going to accelerate. Of course that's going to drive job losses. Now, in the world I'm describing, though, the world that Bitcoin is repricing is a world where all of that abundance allows people to work less forever. They have to, and they each win by all of us on the planet working on a fair system that can't be manipulated and extracting those productivity gains that should flow to you from you.
Yeah. Okay. And in terms of what you talked about in terms of the government, obviously they're looking into at the moment buying Bitcoin for the overall balance sheet in the US, and there's discussions at the moment regarding that and a working group in place. What would it mean for the US and for other countries if they were to buy Bitcoin and hold Bitcoin? And what would be some of the long-term advantages for the US?
So let's start because it's easier to see it at a individual person, right? So individual person, let's use you, right? If you did you buy in 2017?
2016 I started, but 2017 I was buying. Yeah.
Okay, so Bitcoin was probably $4,000,
Yes.
something like that, and now Bitcoin's $95,000 US. So what did now and we're now measuring it in the piece of paper, right? So we are still measuring it in the piece of paper. So what did it do for you? It produced financial security for you. If you measured it in Bitcoin, if you measured in Bitcoin, then in that time your house would have cost probably, I'm guesstimating, but a couple thousand Bitcoin, right? Or 1,000 Bitcoin. And now your house costs 25 Bitcoin or something like that. So all prices described did what I just said and are going to continue to do that. So for you, that means financial security. You're out of the system. You probably pay less attention to all the noise in the existing system. You care about those people. You wonder why it is they're stuck in that system and they can't see Bitcoin. But for you, you've escaped that matrix. And so your life is, in other words, your life is getting better and better and better as a result of you living in the first global free market that's ever existed and you contributing to it. So what would that look like for a company that did the same thing? It would look the exact same thing for a company like MicroStrategy that did the exact same thing. And their and MicroStrategy was trading. It was a $500 million company, and now it's a $80 billion company 5 years later because of the same thing. What would it look like for a government for their citizens doing the same thing? It would look exactly the same. It puts you into the free market. It allow because it's the free market. Your citizens would benefit, and there's going to be a race as people start to understand this. So there's this game theory playing out between corporations, governments, people that is doing this exact same thing. And so that's what it looks like. It is government. Obviously, some governments are going to want to try to control it. They're going to try to get as much as they can, but they won't be able to control it.
Yeah. They won't be able to control it because obviously it's decentralized and there's obviously a limit, 21 million limit on it as well. Can you see which sort of, not what specific countries, but which type of countries can you see being more likely to acquire Bitcoin moving forward? Obviously, there's a plan in the US, but there's other countries that are a bit slower to potentially do adoption. What's your views on that?
So even in the U.S., if you think about the last government and trying to stop Bitcoin, you had a real negative push against Bitcoin, trying to control it. And then you had certain states and certain, because of the Constitution, you had power in the states and you had power in different senators and different governors that were already Bitcoiners that were pushing this through from a decentralized. So you had game theory inside the states too. But let's just say this is imposing a discipline on the world, and all countries will have to do it. But as it's imposed, so you might have a country even like China needing to do it, because if they don't do it and US does it, then it's game set match, because their economy will fail by printed pieces of paper and US will be a more free market. The So you might have even countries like that jumping into this, but Bitcoin's terrible for dictators. It's terrible. So all of the countries that have dictators and running dictators, then why is it terrible? Because it removes the power that they get unjustly from broken money, and it redistributes to all citizens. So it would be really hard to see. I don't think we have a construct for what this is doing, because all of or if you think about communism, Marxism, capitalism, all of these systems all ended up as control systems through broken money all throughout time. And because this system is because this protocol is bounded by energy and decentralized and secure open network, it imposes a different rule set on us that we've never seen before. So the answer, yeah, the simple answer to your question though, Stephen, is we are so early in this understanding. If you're listening to this podcast and you're one of the very few that understands because you're listening to this podcast, or if this is the first time you've heard something like this, I would encourage you to go deeper and deeper and deeper, because if if it was true that this had a potential of repricing the entire world in it, then it would be important that you looked.
Yeah. I think sometimes we forget how early we are in Bitcoin with what's going on. I think when the Bitcoin ETFs were approved and the financial rails were open a bit more to institutions, etc. I think that was the first stage of the going from the early adopters, crossing the chasm slightly over into the mainstream. But we're still extremely early in that. What do you think?
I don't think we're anywhere close to mainstream adoption. Because so many of the people today that are still doing it from a control system, trying to aggregate as much as they can inside a system that they're still denominated. They think that it's a US dollar. So most people, even most Bitcoiners are still pricing in the derivative instrument, which is centralizing. Has to be, because the systems are opposites, right? One system allows productivity to flow to every human on the planet. One system has to centralize it, and it doesn't matter if you're pricing Bitcoin through the centralizing instrument, you're still centralizing. And why I say that is you'll be likely to not hold your keys yourself, to not be outside the system. You'll be likely to centralize through an ETF.
Yeah. So you think we're only going to that kind of mainstream adoption when people are actually pricing things against Bitcoin instead of the US dollar assets and stuff?
Yeah, it could go way up in price versus the US dollar in the meantime, and it will. But I think we're so early on the context of what this is really imposing on the world, and most people's understanding of it, because they're still looking through the lens of the world that they think that's always existed.
All right. And do you see a world where Bitcoin and gold kind of coexist together? Or do you see over time Bitcoin eroding more and more of the store of value market share on gold?
So I'm not against gold. It's been a decent store of value I but this is so different than gold. It's not just a store of value either. It's a network protocol that has transfer of money. It's a network protocol like the internet that has more and more functionality and more payments within it. Gold had to be centralized. Then you built the derivative instrument on top of it. Then you suppressed gold price through printing of money forever. So so when people say gold worked as a store of value, it always failed as a store of value because of the centralization, and you couldn't audit it, you couldn't, and then you could play games on top of it. Those games will be tried on Bitcoin, but they're once when people realize that they can hold this self custody themselves and be outside of those games, when those games are tried on Bitcoin and somebody is naked short on Bitcoin, and nobody will sell back their Bitcoin for that trade to cover, you're going to have an epic short squeeze that'll destroy financial institutions. So Bitcoin's very different in that. So I think in time, to your question, I think it'll take most of gold's market cap. just like it'll take most of real estate market cap. Because if you said real estate is a store of value, why is real estate a store of value? Why real estate for 50 years, 100 years was a utility where you raised your family. It wasn't, it didn't move very much. It only moved once you started printing more money, because the money couldn't be used as a store of value anymore. You had to use the real estate. You had to use other things as a store of value. So the real estate had a monetary premium. And now our neighborhoods all disintegrate because it's no longer a utility value for people. It's a store of value. And why is it a store of value? It's only because the money is bad, because people can't store their money in their money, so they have to store it elsewhere. So Bitcoin's a better store of value, and that's why when you measure real estate in Bitcoin, you'll see it's falling back to its utility value.
You can only compare it to the next best investment, right? And if Bitcoin is becoming less and less Bitcoin to buy a house for the average price of a house, for example, people are going to naturally go towards the good money, right? Over something like a house as an investment.
Yeah, because the house, you still have all your taxes, you have your maintenance, you have the worry that you can't move this, you can't get on a plane with your house value in your head and words in your head like you can Bitcoin. In other words, it's subject to government seizure at the end of these cycles, and so Bitcoin is a better store of value. So of course, it's repricing all of these things. One of the concepts I think that even some of the questions point to, where I'm very different than perhaps most, is Bitcoin I see as completely outside of this system. And most people that are looking at this is they're putting Bitcoin inside the system of assets. It's like gold, it's like this, it's like this. And because they're trying to have a reference point of what it is on something that has never existed. You have an open, decentralized, secure protocol bounded by energy, and you can be completely zero counterparty risk to the rest of that system if you're in it and holding in self custody. Yet most people are putting it inside the counterparty risk by trusting somebody else with their Bitcoin, paying a fee to introduce counterparty risk.
But do you think at the moment that's just a way of people that maybe didn't have access to the system before to be able to buy Bitcoin, maybe didn't institutions, etc., that didn't want to, couldn't self custody, etc., that things like the ETF give them a way of being able to easily store and custody Bitcoin, even though the core mantra obviously is to hold your own coins.
But let's just go on to that. Let's imagine everybody did that. Then it would look like gold. Then price would be suppressed. It wouldn't be a good store of value over time. It would allow this system to keep inflating because nobody would know who had the Bitcoin, and you wouldn't know that how much of the derivative instrument. It won't look like that because as people start to understand this, they go deeper and deeper, and then they hold in self custody. So it's an on ramp. It certainly is an on ramp for a whole bunch more people learning and understanding, and then people go deeper and down the rabbit hole, and they hold in self custody.
Okay, and obviously you're involved in Ego Def Capital. What sort of companies do you invest in, and what's your kind of overall aim for your venture fund?
So we invest in companies that are building on top of Bitcoin and then holding Bitcoin as a treasury asset as they turn profitable. Then essentially they denominate their balance sheet in Bitcoin by so they create value on top of Bitcoin for users, and then by creating value, they earn Bitcoin, and they increase their balance sheets over time in Bitcoin. That's the thesis. So it would look like what we think is venture returns on top of a venture type asset.
And if we look at the corporate balance sheet and people putting Bitcoin on their balance sheet, obviously there's two separate types of company, right? There's a company which has a core business who is selling a product or a service, etc., and they would potentially put Bitcoin on their balance sheet for it to go up in value, etc., in the future. And then these corporate treasury type of companies like Strategy, like 21, that's just been launched by Jack Mallers as well. What do you see as the key differential between the two of these types of companies? And can you see more obviously there's a lot of treasury companies that have come into play over the last couple of years. Can you see more of the first type of companies who have a core business who are buying Bitcoin coming online? Can you see that becoming more popular as time goes on?
So yeah, undoubtedly, and for the same reason that Strategy is doing it, and there will be a whole bunch of competitors or copycats doing it, and all those competitors make all the ecosystem stronger, make all so that what the free market is the competition is in service of you, and so that's why this is important. So more competition in Bitcoin is in service of everybody in Bitcoin. More competition in the broken market is against you. Like essentially all of the competition is to who gets to prey on you more. Because if you're at the top of the stack on money, then you're preying on that theft on more. Competition in a free market is in service of you. So that yes, there will be lots more mini sailors, there'll be lots more mini jacks, there'll be lots of different ideas. At the root of the conversation, though, I think there's only two ways to long term gain more Bitcoin from this. One, leverage it and don't get caught on a short squeeze, right? And so I think so use debt, use instruments, use your use the ATMs or what MicroStrategy is doing, and apply leverage, and make sure the terms of your leverage aren't going to liquidate you on something that has a massive squeeze. Because if you get liquidated, if you're getting liquidated and having to sell your Bitcoin into the squeeze, you're applying more squeeze that's killing your company. So that's what, but that is one way, and I think Saylor does an incredible job at doing that. He invented the playbook, and he's all sorts of different ways. The other way is drive value to people on top of Bitcoin. Build businesses on top of this new protocol, just like the internet, that give value to other people, and that's what we do at Ego Death. And so as you deliver value, you gain more Bitcoin as a result of producing value for those people. I think ultimately those are the only two, and in the very end, what this is going to look like is you have to provide value to society to gain more Bitcoin. And provide value for society. Yeah, sorry, and provide value to society in what they determine is valuable, not what somebody else tells them is valuable, what they determine, because they're going to have to exchange their Bitcoin for the thing that you did.
Yeah, obviously that's would be really good moving forward. What's your views in terms of spending your Bitcoin, right? So obviously we've said it's a superior store of value in the future. What's your views on actually spending Bitcoin in society? Do you think it's something that people should do, or do you think it's an expensive mistake?
So I can tell you I do it, and I spend every day in Bitcoin. I spend on Noster. I spend on any business who will take Bitcoin rather than fiat. I will spend in Bitcoin, and I look for those businesses. In Vancouver, where I am, although there's a lot, it's not everywhere. So I can't go to the grocery store and spend in Bitcoin. That'll come in some regions of the world, though that I travel to. It's totally circular economies on Bitcoin. But I spend on Bitcoin as much as I can. Why? I can easily buy more Bitcoin. Right? I can spend and replace. So why wouldn't I incent the world I want to see faster by doing this? Now let's imagine two worlds where nobody spent in Bitcoin. Bitcoin would be centralized in that case. and that it would look like gold in that case, and then it would be suppressed because everybody was still trusting in the almighty US dollar, the derivative instrument that was being inflated, that was being just printed more and more money, and they would be printing more and more money to get people to think, oh, I'm going to transfer my Bitcoin to a centralized actor to be able to do that. So if you're not spending in Bitcoin, you're contributing to a centralization.
Yeah, I agree with that. I think it's a much better world where people are spending Bitcoin, but not only just spending it, replacing it straight away and trying to store as much of it as possible. It's better than everybody just hoarding Bitcoin and then it obviously becoming more centralized, right?
Yeah. In kind of that statement, and you'll have different people taking different sides on what I just said. But on first principles, ask yourself, is what I said true? Is if you're just storing it in a centralized system, and that centralized system is based on inflation, and as AI moves faster and faster and faster, has to centralize faster. What are you giving your energy to? Yes, you might make it, you might get a whole bunch of wealth, but when you say wealth, what do you mean? Do you mean wealth in pieces of paper that are US dollars, or do you mean real wealth that actually fixes the world? That's the difference.
Yeah, that's a great point. Okay. All right. Thanks, Jeff. And Jeff, just for a matter of time, how can people find out a little bit more about you? Also, find out a little bit more about your book and some of the things that you're doing at Ego Death Capital.
So if it's a company looking for capital, or an investor in the fund, then Jeff, just at Ego Death Capital, if you reached out to Ego Death Capital. If it's something personal, my website jeffbooth.ca just has some content, talks a little bit about the book, but it also, importantly, it tells you my social media handles, where I actually am versus how many scammers are out there trying to take your money. So if there's I'm not on Twitter anymore. I'm just on Noster. But if you're looking there, you'll see my NPub for Noster, and you'll see any other social media I'm on. And if you check social media and it's not on my site, it's not me.
Yeah. I have to say, Jeff, that there's about 10 Jeff Booths currently following me on Twitter. And I know that none of them are you. So it's a massive problem on Twitter.
Go on Noster, and I'll follow you there.
Okay, excellent. I'll do that. All right. Well, it's been really nice talking with you, Jeff. I hope that we have another opportunity in the future, albeit on a podcast or somewhere at a Bitcoin event, to meet in person and have a chat. But I really enjoyed the discussion today, and thanks very much for your time.
No problem. Me too, Stephen.
Okay. Thanks, Jeff.